So what is risk? Risk is simple. Risk is uncertainty. How do you know you have too much risk? You're gonna have to calculate it. Do they tell you? No, they don't tell you what risk is about, unfortunately. If you go to Wall Street Journal, yeah, maybe if you look at the beta. If you're savvy enough, you could look at some of the ratios available, correlation, standard deviation, but most investors don't get to that level. What's mostly available to them is the amount of risk through the beta. You want to know about return? They tell you a lot about the return. So don't worry about that you got a lot. So be careful, find out what the risk is about. And the way you would do it, essentially, is you would need to calculate, you would need to look at the beta, but the beta unfortunately is based on only on historical information. What I would do is I would probably potentially look at the Sharpe ratio, which takes into standard deviation. But again, we're getting into a concept that not everyone is familiar with. So how do you do it? You know what? Buy a stock that you really know what they're doing, that you understand it. Ask your broker, talk to them. The only thing is, they may not even know how to calculate risk. And you know what? No one really knows how to calculate risk. And to make real money, you need to know how much risk is involved. Yeah, you could make 300%, but was it worth it? You could rob a bank too and make $1 million, but what about the risk of that? Always think about risk. Where is it? Where it's hiding?